Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Brynne Kelly. Remember, new shows are posted every Monday and Thursday. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with Brynne Kelly. She's the founder of the Fundamental Angle and expert contributor at the Opportunistic Trader. Brynne is one of my go-to traders when it comes to the natural gas markets. With this latest rally and volatility in natural gas, I asked Brynne to come on to chat about what she's seeing. She shares with us some reasons why nat gas has rallied and remained so volatile. She explains why it's very important for traders to watch the spreads, and she shares with us her preparation and execution process. Finally, Brynne tells us a few things that traders should keep their eye on going forward and how much seasonality has had a role in this current move. Without further ado, let me take you right to the interview with Brynne. Brynne, thanks for joining me.
Hey, Anthony. It's been a while.
It's been a while. It's so great to speak with you.
Yeah, I'm very glad to be back.
And it's great to have you back, Brynne. So anything going on in the natural gas markets these days?
Anthony, it's crazy. We've sat around for seems like years where no one's had any interest in the product, right? And all of a sudden, it couldn't be more on the front of everybody's mind.
Yeah, I was making a little joke earlier saying, is there anything going on in natural gas? Because all I could say is, wow. I mean, the volatility in natural gas almost makes equities look like they're not that busy. So Brynne, talk to us. What's going on in natural gas?
We've had a big move, right? And the velocity of this move from $3 to almost $5 has really harkens back to 10, 15 years ago. I think it was breathtaking. And I like to try to frame up what's happened in the last several weeks by just taking everybody back a little. And, this is a market where we all sat around all summer and watched the weekly storage numbers come across. And week after week after week, the mantra has been, we're X% below 5-year average inventories. We are, record low inventories for this time of year. And it really did nothing to move the market. For the whole summer, really since February, we've sat in a range of around, $2.70 to $3. And so we've had kind of this perception or complacency that there's a production story that negates the storage story. And even though it hasn't really sat right with people and they've really felt like we should make, this market should make a move higher, it's all about timing, right? It took its own sweet time and waited until we got to the winter demand months. And then all of a sudden, a bunch of factors lined up and the market, just, even though it's been anticipating it, I think it was caught really off guard in the way that they were overall positioned.
To me, it sounds like you were seeing signs that this could happen, but Obviously, like you just said, a lot of people were caught off guard with this move.
I would say that people have been anticipating a bull move in natural gas, and yet the market hasn't been moving. And so what became really apparent is the way people were structuring their bets for a move higher in due to weather and storage. And the way they were structuring their bets, and people were all on the same side of the boat. They were long the first few contracts of the winter strip, and the winter strip is November through March. And so November and December, and even January is where length was being placed. And March is where kind of that short leg was being placed. And this is a market that has looked back at history over the last 5 years and watched March settle under April. It's watched January perform and then the rest of the winter sell off. And so what you started to see was typically you would have the front couple contracts trade below the January and February contracts. And they started moving above. You had December over February, and they started moving out to levels that were, if you put together any historical charts, and certainly I posted, a bunch myself, they were at highs. And so it was clear, and in every recommendation you saw, people were, they wanted to be long, but they wouldn't just commit to being outright long. So they bought the front and they sold March. And what happened was that finally came, that bill came due. And when cash was strong every day, the market, kept reacting to cold weather. There wasn't any real selling off. Everyone who was short March ran to that contract at 50 cents below, 30 cents below February, and just went to buy it back. And that has just kept a bid in the front of this market.
What I find most interesting about this move in natural gas after hearing you talk about it is that there's fundamentals behind it. People were anticipating a rally, but yet we have this big short squeeze because a lot of people were positioned wrong.
You typically don't think of shorts having to cover all the way out in month 4, right? And even myself kind of talking about it, it's like I need to just keep making notes, of that it's going to be interesting when we get to March, when that leg of all these spreads unwinds. So of course that happened a lot sooner than I expected it would. And as a result, everybody who had been positioned, long the front, short the back, because they believe the production will be there, right? It's just short term. They're protecting their inventory, but they don't believe it's a long-term story. Everybody's complacent. And, we'll see if that's true or not. But all of a sudden, the amount of unknowns just got too big, and people they wanted out of those March shorts, and that changed all of the spreads. And so you can imagine people weren't even necessarily wrong, but the spreads were no longer moving in their favor, right? So while they might have been net long on a spread basis, the spreads weren't performing. And so, hence you see a market that all of a sudden goes from 45% volatility to 120% volatility, because that's what happens when there's fear. People they just plug all the holes and react first and think later, go back and sort it out later. And, we're still in the reacting phase here. And it's evident by, implied volatility. We moved up a week ago to 100%, and we're still there. So it says that the market is not comfortable. It doesn't believe this is the price level. It might be way lower. It might be way higher. This isn't it. Usually you get a big move and then ball kind of settles back in, and it's just been bid.
Okay, Brynne, I want to summarize here a little bit just to make sure that I'm getting this correctly. You mentioned that there was a fundamental theme behind this rally in natural gas. You said that a lot of people were anticipating a rally. Obviously, not everybody was anticipating a rally to this extent, but nonetheless, people were anticipating a potential move higher. But the way that people were positioned in the spread when March started to rally, where a lot of people were short because they didn't anticipate March to rally the way it did, that really created a short squeeze and has now impacted all of the months in natural gas. Am I getting this right?
You do a great job of summarizing. Just to add to it a little bit, you can imagine, let's say you were long the front and short the back, and you just decided to get out of your short the back. You're still winning, right? But that bid in the contract month that, people hadn't really been, expecting to be bullish, really kind of filtered then through the whole front and set off triggers for people who had, I want to say, complacency trades on, thinking that they were selling option premium at 45% volatility. And that was, a good thing. Or, maybe felt like they'd left too much on the table and suddenly wanted to, buy out of those options and replace them at higher levels. And that all just tends to feed on itself, which, that's why there's a fundamental reason, and there has been a fundamental reason to be bullish natural gas for a long time. But you never know when collectively the market is going to make its move. And that the velocity at which it happened has, is really kind of left, right, people scratching their heads and deciding, like, where do I go now? What now at this level? What is my new bet? What was that the move? Do you take your money and run? I mean, if you were in it at 3 and you've been holding and you got this move, you're happy.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Exactly. It's like if you are bullish natural gas, it always matters where you bullish it from, right? I mean,
exactly.
Because
right.
Now at this point, what I'm hearing from you is that the market got to this point. Fundamentally, there was reasons to lead up to this rally, but now that we've had such a big rally, even though there may be fundamental reasons behind the scenes to still be bullish natural gas, it just may not make sense from these prices.
Exactly. I mean, fear doesn't have, and bullish doesn't have a price level. It has price moves, not price levels. And the thing to respect now at these levels is that this is not the market that moves 2 or 3 cents a day. This is a market that moves 2 or 3 cents if you blink your eye. And so you're looking at a different product here, and you have to approach it in a new way.
Yeah, and you've been through these cycles before, Brynne, and it all starts with your preparation. I see you put a lot of great content out on Twitter, and talk to everybody out there about what goes into your preparation. And you already mentioned spreads, so talk to us about what you're looking at specifically when you're looking at spreads as well.
Yeah, well, I mean, I am totally old school. I love to, get my hands around the data, really take a look at it every single day and, put it together and stretch it and test it, in all different scenarios. And things that are important to me in natural gas are the number one, first and foremost, where the spot market is trading. So where next day gas is trading around the country, because those relationships on what the price is at Henry Hub versus what the price is, at the Boston City Gate. And, for example, Algonquin futures are almost $14 in January. So there are a lot of things in natural gas that when they start to move, they're really good signals, having been in it for a long time, that you start to mean something to me. And so I like to look at, number one, the fundamental front of the market, because that is 100% supply demand. It kind of tells you. And then the relationship of the complex. So Henry Hub, various basis locations, the LNG markets, ethane futures. You can really start to see a picture of what's moving towards where, especially when there are big moves.
I want to stay on preparation here just for a moment. I know you post a lot of great content for traders on Twitter. Can you explain to everybody what you are sharing on Twitter, why it's important to you, and of course, why other traders should be looking at the content you're putting out?
Well, gosh, I mean, I put a lot of stuff out, but the main, knitting that I stick to consistently every day is the storage futures. So there is a weekly storage contract that trades on ICE, right? And it usually is out, I think there's 3 weeks worth. And I find that there's no need for you to spend any time trying to have your own model forecasting what supply demand would be, because those who have really expensive models are expressing where they think the next week's inventory change is going to be through those futures. And within 3 or 4, BCF, they've been spot on, each week. So I would say, pay attention to that. Another one of the good pieces of information that I tend to be very consistent about posting is the daily cash price settlement versus the balance of the month contract. And you can really start to see, starting, I think it was the beginning of November, I have to go back and look, might have been the end of October. All of a sudden, Henry Hub went from, 260, 270, 260, 280 every single day in cash to 3.25 bid, 3.50, $4 bid. So you knew what happens is that people walk in the morning and next day gas starts trading. So people start trading gas for delivery tomorrow. It trades up until around noon. People start looking at where that is. Is it, is it trading incredibly bid? Are people selling it off? And that is when they start to take, their direction and bring that into the futures market. And you can really see that, you kind of have this pre-morning and overnight where, the market kind of either makes a big run and then all of a sudden come 8 o'clock, 8:30, when the cash traders are in looking at what real supply and demand is for tomorrow. And then they start hitting that first month future. So for me, it's really important to, sort of really understand what's going on there, and that it's not just some technical move. It's that the cash traders have all come in, kind of assessed where the market is relative to yesterday and where it's going. And then they move that sentiment into the first month futures. So I think it's critical.
I love the simplicity of your approach, Brynne. There's no secret sauce. You don't have all these different indicators you're looking at. You look at the market and the spreads, and that's all you need.
Of course, there are always, you can talk about which leads which, and of course, many times, an overriding bearish or bullish sentiment in the futures contract can certainly affect cash, but it goes the other way too. And so I think one of the most important things in the natural gas complex is relationships within the complex. And that is what I'm always posting, is either the relationship to another location or the relationship to another month. And those relationships tend to move before the outright price move.
I want to move on and talk about execution now. What's your process for executing your trades?
Well, it's completely a different answer today as, a couple months ago, when the market was very low vol and, you could put on larger bets because you were only going to get a couple cents move, right? You didn't have to cross a bid ask at all. It was very easy to put on outright price plays with maybe some options around it, play some option fences based on your bias. But it really has been, difficult over, up until the last few months to squeeze much out of the moves in the market, which is why you see that open interest was at a record high. When margins are really thin, people put on a larger size because if you're only getting a penny, you need it on a lot more volume. So now this is a market today that has to readjust to that. And so my execution will be completely different, be smaller. And I also can recognize here, you have to, if you want to get in, you're going to have to cross a bid ask. They get wide and have the stomach to kind of wait for the market then to catch up to that bid ask that you crossed. And that's something different that hasn't really been in this market for a while. And so I think, you have to be less like model, wait for your exact price, and more, if you want it, you got to grab it.
So just to make sure we're on the same page here, you're using options and options on futures, and your position sizing depends on the volatility in the market.
Yeah, well, size accordingly. And of course, right now, I think the biggest thing to take advantage of in this market is the call skew. And I'm not really looking overall to place large bets outright, but I think there are some really interesting call butterflies that put you in the game for a few cents, but don't, that's it. You don't have to have a lot of risk. You risk 2 cents to make 25 cents and avoid all the rest of the nonsense this is going on. I think this is a time to be a little bit more structured and smart. But yet, if you need to get in or out of a position, you got to grab it. You got to cross the bid ask.
You mentioned that you're using some option strategies right now to trade natural gas because of the volatility. How volatile does it have to get in natural gas before you start trading these types of strategies versus your, let's call it your normal trade execution?
Well, look, I think it's as easy as saying that you, at 120% implied volatility, you got to adjust your size, the sizing in the market. If you're someone that's comfortable with those types of swings on an outright position, then that would be right for you. If after you have a big move like this, if looking at the structure of the market and placing bets that have lower risk relative to what's going on, then that's what you should focus on. This market has a lot of opportunities besides just this price, right? You could say to yourself, wow, at 475, it seems strong. I could put on a 475, 5.25 call butterfly for a couple cents, and easily we could rally, up to 5. We've got 8 days until expiration. I think it's more about getting participation in moves without exposing yourself to, we've just moved, up 80 cents, down 80 cents, up $1. Don't expose yourself to that. I think it's take advantage of the enormous call skew and structure some transactions around that. At least that's how I look at it. I think outright execution here doesn't even matter, right? If you're buying futures right here, you're willing for it to have a gap down 30 cents on you because you expect it to go up 50. I don't know. That's just not a very good risk reward.
Going forward, what are some things that you believe all natural gas traders should be watching on a day in, day out basis?
Well, for sure, implied volatility. I think people, no matter what, if you have experience in other markets and just not natural gas, you know what it looks like when a market makes a big move and volatility gets very big, and then how it kind of settles in at a price level. I think it's clear, you can see it has not settled in at a price level. And so you need to keep your eye on how bid or how these options are trading, and keep an eye on the cash markets. This Thanksgiving week, historically in my years of trading, especially electricity during holiday weeks, the mantra is, if you see a bid on Thanksgiving, hit it, because you've got companies shut down and factories shut down. And generally, it's not the week where, the market is really strong, but it's also kind of false signals as well. So this, even in and of itself, compared to history, is a lot different. You got to respect it and just keep watching those. If there is no weakness in cash on a holiday week, I would take that as a really bullish signal.
How much is seasonality playing a role right now with these moves in natural gas?
Well, natural gas is a winter peaking market. So in the summer, we produce more gas than we use, and we put it in the ground. And in the winter, we use more gas than we produce. And hence, storage is the thing that ties those both together. So seasonally, we are at, the time of year where we will start consuming more than we produce on a daily basis, right? And then you have to start drawing from storage. I think what we're seeing is that people are nervous about withdrawing out of storage. It's the unknown. Will it be there? We are just at the peak. We don't know what weather is going to look like. We don't know how demand will react to high prices. We're at the peak. We don't know what we don't know. And that is going to keep a lot of volatility in and around these contracts until everybody gets the clock, kind of ticks along a little bit, and we get more actual information to underpin, the expectations.
Great stuff today, Brynne. Where can people find you on Twitter, and give us a website to check out?
At Brynne K. Kelly is probably the best place to find information I post. And also thefundamentalangle.com is the primary website. And then if they want to go for the opportunistic trader, it's opportunistictrader.com.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.